Welcome back, everybody, to another episode of the Dental Boardroom Podcast. This one's going to be a little bit of a quicker podcast. It is part 2 of the putting your kids on payroll as a strategy for building wealth and also supporting kids potentially through college and perhaps some other support you want to give them in their life by using the money they receive from the payroll. Now, a couple things I want to reiterate on this from the prior episode. You are essentially just shifting income in a higher tax bracket, i.e. your tax bracket, to a very low tax bracket or a zero tax bracket from a federal income tax standpoint to your kids. And you typically want to do it between the ages of 6 or 7 up to really the time they're going to or finishing college. So you've got roughly about maybe 15 to 20 years there to put your kids on payroll, pay them the standard deduction, which in 2025 is $15,750. And you're going to save somewhere around $3,000 to $4,000 per child by doing that every year. I've probably saved $200,000 to $250,000 in taxes over the many years of doing this with my 3 kids. And now there's also money in some 529 education savings accounts that I have for them. One of my kids just left off to college this past week at UCSB here in California, and we're using that 529 money. So it has been a beautiful strategy. We never had a client really audited over this issue. I think it's a low risk issue and we don't want to abuse it. You do want to have the criteria of job profile for your kids printed out somewhere. Maybe put some pictures around the office with them smiling for modeling fees, and maybe bring them in the office periodically to do a little bit of cleaning and learn some good work ethic as well. Also reiterating the need to have the kids' payroll deposited in your personal checking account. You could do their own checking account, but that's a pain in the butt. Do it in your own checking account, and then it can be used to, fund normal daily living expenses. Or my preference would be you use it to fund their own Roth IRA, where you are the custodian of it. It's called the custodial Roth IRA for your kids, and or a 529 education savings account. Now, one of the things in my last episode I don't think I really struck home with was,
are you looking to buy or sell a dental practice? If you're a seller, how do you find a strong list of potential buyers? There's no MLS or Zillow for dental practice sales. In such a fragmented market, many dentists selling their practice feel discouraged. That's why I built PracticeOrbit.com. PracticeOrbit is modernizing how dental practices are bought and sold. It's a platform technology. Y'all know them: Zillow, Airbnb, Uber, and OpenTable, just to name a few. These technologies do 2 things. First, they help match buyers and sellers by centralizing the marketplace. Second, once the match between buyer and seller is made, these technologies help them navigate the sale to a successful close. Here are a few of the features inside of Practice Orbit. Users can determine a reasonable sale price for a practice in just minutes. All they need is the most recent business tax return. Practice owners can use the directory to find important service providers like practice brokers, attorneys, accountants, and bankers. Practice owners and their brokers can invite those service providers into the platform, so all parties are coordinating the sale together. Practice owners will have a beautiful digital listing of their practice, like a home on Redfin. And importantly, the listing will be anonymous, and personal information like your address, name, and pictures are only released after an NDA is signed and approved by you or your broker. Practice buyers can create saved searches to be auto-notified when new listings come on the platform that fit their desired specialty and location. And hey, dental practice brokers, you can list all your practices on the site for free. By doing so, you'll get access to Practice Orbit's large pool of buyers, all of whom have created profiles and saved searches to be auto-notified when new listings come for sale. You can use the platform to introduce your listings to a targeted set of buyers. Additionally, and optionally, you can use the platform tools such as a built-in NDA, a customizable LOI, and a workflow tool to navigate the sale from LOI to closing. In fact, you can manage all your listings on the system from listing the practice to NDA to LOI and finally to closing the deal. Create your free account today at www.practiceorbit.com.
the fact that your kids, if you pay them the standard deduction, and the standard deduction is that free sort of tax deduction any tax filer gets just for breathing. In 2025, that's $15,750, is if your kids get paid that or less, they're not paying anything in federal income tax, zero. They're in the 0% tax bracket. Then they put it in a tax-free account and it grows tax-free, and therefore that money entirely escapes the IRS ecosystem. And remember, you get a tax deduction for paying your kids. That's the benefit, is you save about $3,000 to $4,000 per child per year. So if you have 3 kids and you do it for 15 years, that's a lot of money you're going to save. And you can use a lot of that tax savings, that money that would have gone to the IRS, to go to your kids' IRA or 529 accounts. So I talked a lot about Roth IRAs in my last episode. Now I'm pivoting to the 529 account in this episode. Now, you have your kids on payroll. They're funding it. It's going in, their payroll's going into your personal account. You set up these 529 accounts. Now let's talk about these. These 529 education accounts are unique. They're not just like an IRA or a normal investment account. You have to select a state-administered 529 account. Now, every state has their own 529 platform. I love Utah because Utah uses Vanguard, and Vanguard is low cost, and I think they have great index funds, which are perfect for a 529 account. Utah's program is called My 529. If you're in a state that allows a state income tax deduction for funding a 529 account, I would probably go with your own state's plan. And you can just look up, just Google your state. Let's say that's Pennsylvania 529 account plan. How do I get one set up? And it'll probably be the first link right there. Or you use the Utah plan. Now, you don't need to live in Utah, nor does your child need to go to a school in Utah in order to get the full 100% benefits of the lower cost Vanguard options provided by the My 529 Vanguard Utah plan. Totally fine. My son is going to UCSB here in California, that's Santa Barbara, and he's using a Utah 529 account, and there's no issue with that whatsoever. All right, what are some of these benefits of the 529? Number one is if you use it for college, they grow tax-free. Investment grows tax-deferred, and withdrawals for qualified education expenses are tax-free. For those of you watching on YouTube, you can see it on my screen. State tax benefits. Many states offer state income tax deductions or credits for contributions. Like I said, if your state allows it, you can look it up, Google it. Can I get a state income tax deduction for funding a 529 in my state? It will tell you. Some states have it, most states don't, in which case it doesn't matter which state plan you use. High contribution limits. I won't say it's unlimited, but you can fund a massive amount in these 529 accounts. Control stays with the account owner. Now, I want to talk about this one. You could set up a 529 in the name of your kids. Don't do it. It doesn't help them if they apply for financial aid later. It's less damaging to have a 529 balance when a kid is applying for financial aid if that 529 is held or owned by the parents. That's the first benefit. The second benefit is that if your child doesn't need it, doesn't use it, you can then transfer their 529 money to their siblings' 529 account or cousin's 529 account, or even hold it for their kids down the road. So there's a lot more flexibility in transferring that 529 money to other college attendees in your family if the primary 529 child does not end up using it. And that flexibility, that control, is a very valuable aspect of the 529 account. Flexibility of beneficiary. So again, that's just what I spoke about. And then 529s, they can cover more than just college. They can cover K through 12 actually as well, if you're interested. Now, I prefer not to do that because one of the benefits is growth, and growth only comes in time. But 529s can also be used for trade schools or apprenticeship programs as well. Also, you can use up to $10,000 of a 529 account to pay down student loans for your child. And then they are financial aid friendly. They're generally treated more favorably than a normal custodial investment account for your child as well. So a lot of benefits there with the 529 accounts. A good strategy might be you take the roughly $14,000 per child deposited for the year after their FICA tax. So again, their gross W-2 is $15,750. They pay a little bit in FICA tax. Let's say they're left with about $14,000 left. You take $7,000 this year, 2025, and you fund the Roth IRA. Now you can fund that after the year is over, all the way up to, I think it's April 1st or April 15th. You can fund it after the year is over. That's fine. Or you can fund it in the year up. That's fine too. And then you take the additional $7,000 beyond the Roth fund, and you can put it into an Education 529 account. Or you can just keep it and use it for your normal daily spending too. That's fine as well. But I really like to take this money related to your kid's payroll and earmark it for a given financial planning purpose. I feel like it becomes not just one win from tax savings, but two wins from tax savings and building a pool of assets that can be used for very targeted purposes later with the kids.
Do you ever feel lost in your practice finances? And how about your personal finances? Ever wonder where your hard-earned money goes and why you're not seeing the financial progress you worked so hard for? If so, listen up. As a dental CPA and financial planner, I've created our company, Practice CFO, just for you. With almost 2 decades of experience, Practice CFO integrates great CPA services like accounting and tax with customized financial planning, both business and personal. Think of it this way. Our dental-focused CPA services give us the x-rays we need to clinically plan your global finances and be effective financial planners. It's a highly customized approach we call the CFO model. Historically, having a CFO or chief financial officer was an advantage of large corporations only. But today, Practice CFO gives that same advantage to private dental practice owners. As a client of Practice CFO, you'll be assigned one of our dedicated CFO advisors. You'll receive insightful financial reports each month, have regular financial review meetings, reduce taxes, grow your wealth, and feel more in charge of your numbers. Because we believe that in the competitive landscape of dental practice ownership today, you have to be an effective business owner, not just a capable clinician. Reach out to learn more at www.practicecfo.com.
All right, here is a few tips for you owners out there. Use a payroll service for this. Obviously, this goes without saying. Please don't try to run your own payroll. That's a horrible use of time, and you're going to mess up, I promise, and get a bunch of tax letters. That's like 1980 payroll processing right there. Please don't do paychecks anymore. You're like 15 years out of date if you're doing handwritten checks. You should be doing direct deposits. And yeah, that does mean typically that you need to create a spread between the end of the pay period and the direct deposit date to give time for tabulating the hours and submitting it to the payroll company and doing the direct deposits. Please be doing that. I prefer a week from the end of the payroll to the time that the direct deposit lands in the account to give everybody enough sort of cushion to process everything, and when there's weekends in between the end of the pay period and the target direct deposit date. So anyways, use a really modern payroll service. We here at Practice CFO have what I think is the most modern payroll service through our payroll tech company that we use on the back end called Rippling. It's the latest and greatest out of the payroll world. And then pay a fair wage. So again, I would say the standard deduction. I would document what they're doing, ideally. And then I would also just consult your CPA on this now. FYI, a lot of CPAs are going to say, oh, this is too aggressive, yada, yada. I've been doing this for 17 years and never had a single IRS audit on the matter. Just as long as you document it, the IRS cannot dictate who you hire or don't hire. You can hire your kids. That is perfectly fine, nor does the country require a child to be 18 in order to be employed, obviously. So this is all legit. Just sort of document it so you have a trail to point to in the event that you were audited, and this was questioned. Conclusion, this is more than just tax saving. It's building wealth, and it is lowering your tax bill and can help fund kids' futures. But like I said, you don't have to use it to fund your kids. You can just put it in your normal personal checking account and use it for your day-to-day needs. All right, everybody, a rather short episode today, but these 2 episodes are on the huge value of getting your kids on payroll. You know, a lot of tax planning and a lot of wealth accumulation, it's like stacking quarters. You're not going to get a $50,000 benefits from this one strategy, but it's going to get you, $8,000 to $12,000 a year. And you add that up every year, trust me. You do that, you do home office, you do automobile, use depreciation effectively, maybe do a little tax timing near the end of the year, maximizing that 401k safe harbor profit share. If you're old enough, you can do a defined benefit plan. There is just an array of tax strategies that any one of them may not be huge, although the defined benefit and the 401k, those are huge. But any one of them may not be huge. It's in the aggregate that you're able to cut down 30 to 50 or 60%. If you have a defined benefit plan, it could literally be up to like 80% of your taxes are being chopped off, rerouted away from the IRS and back into your personal balance sheet, where you are dramatically accelerating financial independence. That is the name of the game here with the Dental Boardroom Podcast, and that is the mission of Practice CFO. Hope you enjoyed it. Hope you learned a few things. Until next time.